Hey everyone, welcome back to part 2 of the series on how to get started with investing. If you haven't seen the first video yet on different brokerages and setting up your account, I've included the link at the top for you to check that out. In this video I want to focus more on setting up your investment budget. Everyone's financial situation is different, and the money you put into your account will depend on your personal expenses. This includes things like rent, tuition, groceries, or anything you have a budget for. Still, it's not impossible to invest, so as long as you set aside a specific percentage from your paycheck, whether it be daily, weekly, monthly, or even yearly, whatever you're comfortable with. I want to talk about 3 strategies when it comes to adding money into your portfolio. These factor in things like the level of risk you want to take and the rate at which you want to set aside money strictly for compounding interest growth. The first strategy is being conservative. The best way to do this is with dollar cost averaging. This is a popular technique used by a lot of investors, in which you invest the same amount of money at regular time intervals that you set up for yourself. Combining this with fractional investing, you can put in a fixed amount every week, like $100 for example. This allows you to buy small portions of companies to be more safe and not quickly exhausting your buying power that you have in cash. You're also able to get a much nicer cost average, preventing the risks of overbuying at higher prices that may quickly fall if the stock gets affected with any negative news. The only downside with this strategy is that you'll be investing at a much more slower rate, potentially missing fast moves and stock prices going up. This induces fear of missing out for many investors, causing them to panic buy a bunch of shares and breaking the rule of dollar cost averaging. I highly recommend this strategy if you're willing to follow through with it strictly, and you aren't too affected by moves in the market. It's great for someone that wants to at least invest with small portions, while experiencing the market in a safe way that reduces their risk. The second strategy is more moderate, or we can even say moderately conservative. It follows the principles of dollar cost averaging, except you're buying one whole share at different time intervals. This means you buy a whole stock regardless of price, rather than focusing on the cash value that you want to invest. The benefits of this is that you're building your position much more faster, while also not buying too much at the same time. I like to do this for more expensive stocks, buying one share every week to 2 weeks so I can be safe while not missing significant returns as well. This is much more balanced, and it's what helped me to build a small position in Boeing, for example. Recently, Boeing has significantly dropped from all-time highs due to their airplanes being grounded and with non-essential travel being banned in most countries. While they've had ongoing problems before this, the stock price became extremely distressed, to the point that they nearly lost $24 billion in market cap in just 2 days. I'm a big believer of Boeing jumping back in the long term, and I knew I wanted to pick up their shares trading at a cheap discount. The only problem was, I didn't want to get caught buying in too high, and then watching the stock continuously drop in a negative downtrend. That's why for the past few weeks, I had been watching the stock fluctuate in the $95 to $150 range, and only starting to add shares slowly as it reached my target price. While the stock price did drop even more after I bought my first share, I added more shares one by one slowly, and I managed to smooth my cost basis down to around $100. This was under my initial buy target of $115 anyways, so I was satisfied that I hit that target. The stock price did manage to jump back up again, and it's currently trading in a $150 to $180 range. I don't feel as bad with the price increase, as I managed to purchase some shares below 100, and I know I can wait again to buy at that level if it ever falls back down again. Going on to the third strategy, which is more aggressive, but I personally like to call it adventurous. This strategy involves bulk buying, whether in quantities of 25, 50, 75, or even 100 shares at a time. The choice is yours. The premise is that if a stock is trading for an extremely cheap price, you can put in a small amount of cash to get a significant amount of shares. This serves like a multiplier, which can give you really good returns in the chance of a high price bounce, which can happen because of market news, company earnings, or even the company you invested in being bought out. I only do this for undervalued stocks I think will bounce back fast in the short term, and for companies I believe to significantly grow in the long term anyways, so it doesn't matter if I overpay in the short term with a large amount of shares. This strategy is really useful for buying cheap dividend paying stocks as well, as you'll get a higher dividend payout per quarter for holding a higher number of the company's shares. The biggest downside is that you face a lot of risk with this strategy, and you can get hit hard with higher losses if your stock ends up performing really bad. Your loss per stock would significantly be multiplied by the number of shares that you had bought in bulk. A good example of this risk is with penny stocks. Many professional investors know that penny stock companies are a big gamble, and the true definition of how extreme high-risk, high-reward situations can be. As tempting as it is for new investors to buy large blocks of them for a quick flip, it's still very risky, and you can end up holding a losing position for a long time. I want to repeat, this strategy isn't for the faintest of heart, and you should only do this if you've done the research, and you strongly believe the company you're bulk buying in can survive in the long term. I hope you enjoyed hearing my perspective of different ways to budget and how to buy your stocks. If you have other strategies that work for you, feel free to mention them in the comments below. I'm always open to learning more about what other investors do as well. If you've been liking the content so far, I hope you can subscribe and give the video a thumbs up as well, as it really helps with the production of the channel. I hope to see you in the next video, in which I'll be discussing different industries to diversify your investments in. Thanks for watching.